I mean, its expenses have been paid, its losses have been paid, all through assessments on banks. It's been a mutual insurance company of the banks, backed by the federal government and associated with the federal government. But now it holds $100 billion, and that consists of premiums that were paid in and investment income on the premiums, less the expenses and paying of all the losses. And think of the incredible amount of peace of mind that's given to people that were not similarly situated in when the Great Depression hit. So the Great Depression went on, and it lasted a very long time, but it lasted a lot longer in the minds of people than it did actually in its effects. World War II came along, and on sort of an involuntary manner, we adopted Keynesianism. We started running fiscal deficits, of course, that were absolutely huge, and took our debt up to a percentage of GDP, which we've never reached, had never reached before, and never have reached since. So we had an enormous economic recovery, but the minds of people had been so scarred, the memories. Parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about, and it affected stock prices in a rather remarkable way, to the point, if you'll change to the next slide, it was January 4th of 1951 that the kid who was born on August 30th in 1930 had finished college before the stock market got back to where it was at that earlier time. So take the years from 1930, or 1929, really, to 1951, or take the year from my birth, 20 years, and bear in mind that the country was only 140 years old when this started. That's 20 years out of this amazing 231-year lifetime of our country that was flat out, a time of, for a long time, of no economic growth and no feeling by people in terms about the wealth of the country, about what the American economy was worth, what all these corporations that were doing far, far, far better than they were long ago. But it took all of that time to restore in the market a price level that was equal to what it was when I was born 20 years earlier. So if you think about the fact that we're enduring a few months, and we'll endure many more months, but and we don't know how it comes out. And people in the 30s didn't know how it was going to come out, but they endured, persevered, prospered, and the American miracle continued. But it's interesting in that I actually don't have a slide for the next one, because last night I was thinking, after all the slides had been prepared, I was actually thinking about this. Last night I was thinking, after all the slides had been prepared, I was actually thinking about this a little bit, and I remembered that at the start of 1954, the stock market the Dow was only at about 280. And I remember 1954 because it was the best year I ever had in the stock market. And the Dow went from essentially, 280 or thereabouts at the start of the year to a little over 400 at the end of the year. And when it went to 400, as soon as when it crossed 381, that famous figure from 1929, when it went to 400, this will be hard for some of you to believe, but everybody wondered, is this 1929 all over again? And that seems a little far-fetched because it was a different country in 1954. But that was the common question, and it actually achieved. It achieved such a level of worry about whether we were about to jump off another cliff, just because the 381 of 1929 had been exceeded, that they held Senator Fulbright, Bill Fulbright of Arkansas, who became very famous later in terms of the Foreign Relations Committee, but he headed the Senate Banking Committee. And he called a special, for a special investigation, and he called it the, what do you call it, the stock market study. But it really, if you read through it, he really was questioning whether we had built another house of cards again. And on his committee, it's interesting to see the Senate Finance Committee, one of the members was Prescott Bush, the father of George H.W. Bush and grandfather of George W. Bush, and had some illustrious names. And his committee, in March of 1955, with the Dow at 405, assembled 20 of the best minds in the United States to testify as to whether we were going crazy again, because the market was at 400, the Dow was at 400, and we'd gotten in this incredible trouble before. But that was the mindset of the country. It's incredible. We didn't really believe America was what it was. And my boss, the reason I'm familiar with this 1,000-page book that I have here, I found it last night in the library, was that I was working in New York for one of the 20 people that was called down to testify before Senator Fulbright. And he testified right before Bill Martin, who was running the Federal Reserve, testified, and right after General Wood, who was running Sears, testified. Sears was very, very important then. And Bill Martin, of course, is the fellow that, and Bill Martin, of course, is the fellow that, the longest running chairman in the history of the Fed, and he's the one that gave the famous quote about the function of the Fed was to take away the punch bowls just when the party started to get really warmed up. But Ben Graham, my boss, sent me over to the public library in New York and to gather some information for him. Something you could do in 5 minutes with a computer now, and I dug out something, and he went to testify. And on page 545 of this book, I knew where to look. I didn't have to go through it all, but he had the quote which I remember. And I remember because Ben Graham was one of the three smartest people I've met in my life, and he was the dean of people in securities business. He wrote the classic security analysis book in 1934. He wrote the book that changed my life, The Intelligent Investor, in 1949. He was unbelievably smart. And when he testified with the Dow at 404, he had one line in there right toward the start in his written testimony, and he said, the stock market is high. It looks high. It is high, but it's not as high. It looks high. It is high, but it's not as high as it looks. But he said it is high. And since that time, if we'll turn to the next slide, of course, we felt the American tailwind at full force, and the Dow let's see, when the Dow went down Friday, but when we made the slide, it was about 24,000. So you're looking at a market today that has produced $100 for every dollar. All you did was had to believe in America and just buy a cross-section of America. You didn't have to read the Wall Street Journal. You didn't have to look up the price of your stock. You didn't have to pay a lot of money in fees to anybody. You just had to believe that the miracle was intact. But you'd had this testing period between 1929 and really, certainly 1954 is indicated by what happened when it got back up to 380. You had this testing period, and people really they'd lost faith to some degree. They just didn't see the potential of what America could do, and we found that nothing can stop America when you get right down to it, and it's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America. And that, in my view, is as true today as it was in 1789, and even was true during the Civil War and the depths of the Depression. Now, I'm now about to say something that and don't change the slide yet, but I'm now about to say something that some of you will be tempted to argue with me about, but I would make the case that we are imperfect in a great many ways, but I would say, and if you'll put up the next slide, that we are now a better country as well as an incredibly more wealthy country than we were in 1789. We're far, far, far from what we should be, will be, but we have gone dramatically in the right direction. It's interesting. We said in 1776, we said we hold these truths to be self-evident, that all men are created equal, endowed by their creative with certain unalienable rights. Among these are life, liberty, and pursuit of happiness. And yet, 14 years later, a year after we really officially began the country in 1789, adopted a constitution, we found that more than 15% of the people in the country were slaves. And we wrestled with that. But when you say the word self-evident, that sort of sounds like you're saying any damn fool can recognize that. And you certainly say, you can argue maybe a little bit about life and the pursuit of happiness, but I don't see how in the world anybody can reconcile liberty with the idea that 15% of the population, liberty with the idea that 15% of the population was enslaved. And it took us a long time to at least partially correct that. It took a civil war. It took losing 6% of those people, that males that were between 18 and 60 years of age. But we've moved in the right direction. We've got a long ways to go, but we've moved in the right direction now. In addition, going back again to that 1776 statement, that all men are created equal and endowed by their creator, etc. I think it was self-evident to the 50% of the population that they were getting a fair deal for over half the lifetime of the country. It took 131 years of our country's 231 years. It took 131 years until women were guaranteed the right to vote for our country's leaders. And then what's even more remarkable is that after we adopted the 19th Amendment in 1920, it took 61 more years until a woman was allowed to join those 8 males on the Supreme Court. I grew up thinking that the Supreme Court, must have been said it had to be 9 men, but it 61 years, so it took 192 years before Sandra Day O'Connor was appointed to the court. And now you can say that there was a pipeline problem. Half the population may have been women in 1920, but they weren't half the lawyers, or they weren't 10% of the lawyers probably. So you can understand some delay, but 61 years is a long time to go and to pick 33 males in between. If that was entirely by chance, then the odds against that, if you were flipping coins, is about 8 billion to 1. Now, like I said, there was a pipeline problem. Flipping coins is about 8 billion to 1. Now, like I said, there was a pipeline problem. But it took us a long, long time. And it's not done yet. But I think it does give meaning to the fact that we are a better society with a lot of room to go. But we are a better society than existed in 1789. When you go to Colonial Williamsburg, you have that. I've been there a couple of times. As a matter of fact, I watched the debate between Jimmy Carter and Gerald Ford there in 1976, it was not a great time to be black. It was not a great time to be a woman, and both of those categories still have certainly got potential for significant improvement in terms of fulfilling that pledge made in 1776 about how we believe that it's self-evident that all men are created equal. But we have made progress. We are a better society, and we will, as the years go by. If you'll move to the next slide. And I believe that, and I think, let's see if I can get these slides in the proper order here. I believe that when you get through evaluating all of the qualitative facts, what we have done toward meeting the aspirations of what we wrote in 1776. What we wrote in 1776 wasn't a fact, but it was an aspirational document, and we have worked toward those aspirations, and we have a long way to go. But I'll repeat, if you'll move to the next slide, that never, never bet against America. Now, bet against America. Now, let's move on now to a much broader subject, what I don't know. And I don't know, and I don't know, and perhaps with a bias, I don't believe anybody knows what the market is going to do tomorrow, next week, next month, next year. I know America is going to move forward over time, but I don't know for sure. And we learned this on September 10th, 2000. And we learned this on September 10th, 2001. And we learned it a few months ago in terms of the virus. Anything can happen in terms of markets. And if you can bet on America, but you have to be careful about how you bet, simply because markets can do anything. On October, whatever it was, in 1987, October 11th, I believe, Monday, markets went down 22% in one day. In 1914, they closed the stock market for about 4 months. In 1914, they closed the stock market for about 4 months. After 9/11, closed the market for 4 days. We hustled to get it going again. But nobody knows what's going to happen tomorrow. So when you bet, I tell you to bet on America, and I tell you that that's what's really gotten me through ever since I bought my first stock when I was 11. I mean, I caught a huge tailwind in America, but it wasn't going to blow in my direction every single day, and you don't know what's going to happen tomorrow. And I would like to, in the context of the present news, point out something you may find kind of interesting. If you go to YouTube, you'll find on June 17th of 2015, 4+ years ago, you'll find Sam Nunn, who's one of the people I admire the most in the United States, in the world, enormous patriot, tremendous senator, and he's carried on thankless work since leaving the Senate, and I'd say heading something called the Nuclear Threat Initiative, which most of you haven't heard of, but have been slightly involved in it. Sam Nunn founded that. And the Nuclear Threat Initiative is simply organizations that are devoted to trying to reduce the chances of something of a nuclear, chemical, biological, and now cyber nature, from either malevolent or accidental or whatever it may be, from causing deaths to millions of Americans. And among the things, Sam co-founded it, and but he's been the heart and soul of the organization subsequently. And they talked about, worried about pandemics along with the nuclear threat for decades. And he's participated in war games where they play out various scenarios, including malevolent pandemics that could be started by the same kind of nut that sent the anthrax letters in around 9/11, or a little after. And Sam appeared on this YouTube presentation, and I'm sure he's been on many others. I just happened to look this one up, and talked about the dangers of a pandemic. And anybody should listen to Sam Nunn anytime he talks. So he said at that time, germs don't have borders, which we've certainly learned in the last couple of months. And when I clicked on YouTube, if you'll go to the next, I found out that it had it had 831 views, and this was only a few days ago. I looked it up, and maybe, I don't know whether most of those views have just been the last few days, or the last few months, I should say, because of the interest in pandemics. But it is hard to think about things that haven't happened yet. And so we can experience, when something like the current pandemic happens, it's hard to factor that in, and that's why you never want to use borrowed money, and at least in my view, in margin to buy into investments. And we run Berkshire that way. We run it so that we literally try to think of the worst case of not only just one thing going wrong, but other things going wrong at the same time, maybe partly caused by the first, but maybe independent even of the first. And, you learned in I don't know what grade now, probably earlier than when I went to school, but in 5th or 6th grade, that anything, you can have any series of numbers times zero and just need one zero in there, and the answer is zero. And there's no reason to use borrowed money there, and the answer is zero. And there's no reason to use borrowed money to participate in the American tailwind, but there's every other reason to participate. Now, I can't resist pointing out that in October of 2019, a large 300-page, got it right here, book was brought out, and Johns Hopkins, one of the most respected institutions in the country, the Nuclear Threat Initiative, NTI, and the intelligence group at The Economist collaborated to evaluate the problems of the worldwide preparedness for pandemics, essentially. And I think in November, Sam came out to see me with Ernie Maurice, former Secretary of Energy, who now is the CEO of NTI. He and Sam are co-chairman. And Beth Cameron, who did a lot of work on this report, came out to see me. And they gave me, in November, I believe, of last year, they gave me this appraisal. And the opening line, if you'll turn the page, this is the opening line of this 300-page tome. Biological threats, natural, intentional, or accidental, in any country can pose risk to global health, international security, and the worldwide economy. And this book was prepared in order to evaluate the preparedness of the various countries and rank them. We ranked pretty well, but all of the countries got a failing grade, basically. Now, you would think with the prestige of Johns Hopkins and The Economist, along with people like Sam and Ernie, et cetera, that this would have gotten some attention. And again, Sam, if you turn to the next page, Sam and the others went on YouTube on October 24th, 2019, and they have racked up, as of a couple days ago, 1,498 views. Now, my friend Bill Gates was delivering the same warning at a TED Talk some years back, and he's gotten a lot more views, but it just says something about the fact that you're going to get bolts from the blue, and you can read papers about them, and you can talk about what'll happen if some, as the fellows at Solomon used to tell me, some 25 Sigma event comes along, and they say that'll happen once in the life of the universe, and then it happens to them a couple of times in a month and they go broke. You just don't know what's going to happen. At least in my view, that America's tailwind is not exhausted. You're going to get a fine result if you own equities over a long period of time. The idea that equities will not produce better results than the 30-year Treasury bond, which yields 1.25% now. It's taxable income. It's the aim of the Federal Reserve to have 2% a year inflation. Equities are going to outperform that bond. They're going to outperform Treasury bills. They're going to outperform that money you've stuck under your mattress. I mean, they are a enormously sound investment, as long as they're an investment and they're not a gambling device or something that you think you can safely, buy on margin or whatever it may be. It's interesting that stocks offer, stocks are we always look at stocks as just being a part of a business. I mean, stocks are a small part of a business. If in 1789 you'd saved a small amount of money and it wasn't easy to save, you might have bought, with those savings, you might have bought a tiny, tiny plot of property. Maybe you bought a house that could be rented to somebody, but you didn't really have the chance to buy in with 10 different people who were developing businesses and who were presumably putting their own money in, and that would have the American tailwind behind. And of the 10, a reasonably high percentage would succeed in a way and earn decent returns. But those are the choices you might have had to do with savings. And they started offering bonds originally, and there again you got a limited return, but the return may have been, in those days, may have been 5 or 6% or something of the sort. But you can't buy risk-free bonds. I mean, the yardstick for me is always the U.S. Treasury, and when somebody offers you quite a bit more than the U.S. Treasury, there's usually a reason. There's more risk. But going back to stocks, people bring the attitude to them too often that because they are liquid and quoted minute by minute, that it's important that you develop an opinion on them minute by minute. Now, that's really foolish when you think about it. And that's something Graham taught me in 1949. I mean, that single thought. Stocks were parts of businesses and not just little things that moved around on charts. Charts were very popular in those days, and whatever it may be. Imagine for a moment that you decided to invest money now, and you bought a farm. And the farmland around here, let's say you bought 160 acres, and you bought it at X per share, or per acre. And the farmer next to you had 160 identical acres, same contour, same quality of soil quality. So it was identical. And that farmer next door to you was a very peculiar character, because every day that farmer with the identical farm said, "I'll sell you my farm, or I'll buy your farm at a certain price," which he would name. Now, that's a very obliging neighbor. I mean, that's got to be a plus to have a fellow like that with the next farm. You don't get that with farms. You get it with stocks. If you own 100 shares of General Motors, on Monday morning, somebody will buy your 100 shares or sell you another 100 shares at exactly the same price, and that goes on 5 days a week. But just imagine if you had a farmer doing that. When you bought the farm, you looked at what the farm would produce. That was what went through your mind. You were saying to yourself, I'm paying X dollars per acre. I think I'll get so many bushels of corn or soybeans on average. Some years good, some years bad. Some years the price will be good, some years the price will be bad, etc. But you think about the potential of the farm. And now you get this idiot that buys a farm next to you, and on top of that, he's sort of a manic depressive and drinks, maybe smokes a little pot. So his numbers just go all over the place. Now, the only thing you have to do is to remember that this guy next door, is there to serve you and not to instruct you. You bought the farm because you thought the farm was had the potential. You don't really need a quote on it. If you bought in with John D. Rockefeller or Andrew Carnegie, and there were never any quotes. Well, there were quotes later on, but basically you bought into the business, and that's what you're doing when you buy stocks. But you get this added advantage that you do have this neighbor who you're not obliged to listen to at all, who is going to give you a price every day, and he's going to have his ups and downs, and maybe he'll name a silly price that he'll buy at, in which case you sell if you want to, or maybe he'll name a very low price and you'll buy his farm from him. But you don't have to, and you don't want to put yourself in a position to where you have to. So stocks have this enormous inherent advantage of people yelling out prices all the time to you, and many people turn that into a disadvantage. And of course, many people can profit in one way or another from telling you that they can tell you what this farmer's going to yell out tomorrow or next. Profit in one way or another from telling you that they can tell you what this farmer's going to yell out tomorrow or next. Your neighboring farmer's going to yell out tomorrow or next week or next month. There's huge money in it. So people tell you that it's important, and they know, and that you should pay a lot of attention to their thoughts about what price changes should be, or you tell yourself that there should be this great difference. But the truth is, if you owned the businesses you liked prior to the virus arriving, it changes price. Prior to the virus arriving, it changes prices, and it changes, but nobody's forcing you to sell. And if you really like the business and you like the management you're in with, and the business hasn't fundamentally changed, and I'll get to that a little when I report on Berkshire, which I will soon, I promise. The stocks have an enormous advantage, and you still can bet on America, but you can't bet unless you're willing and have an outlook to independently decide that you want to own a cross-section of America, because I don't think most people are in a position to pick single stocks. A few maybe, but on balance, I think people are much better off buying a cross-section of America and just forgetting about it. If I'd done that when I got out of college, it's all I had to do to make 100 for one, and then collect dividends on top of it, which would increase substantially over time. The American tailwind is marvelous. American business represents, and it's going to have interruptions, and you're not going to foresee the interruptions, and you do not want to get yourself in a position where those interruptions can affect you, either because you're leveraged or because you're psychologically unable to handle looking at a bunch of numbers. If you really had a farm and you had this neighbor, and one day he offered you $2,000 an acre, and the next day he offers you $1,200 an acre, and maybe the day after that he offers you $800 an acre, are you really going to feel that at $2,000 an acre, when you had evaluated what the farm would produce, are you going to let this guy drive you into thinking I better sell because his number keeps coming in lower all the time? It's a very, very, very important matter to bring the right psychological approach to owning common stocks. But I will tell you, if you bet on America and sustain that position for decades, you're going to do better than, in my view, far better than owning Treasury securities, or far better than following people who tell you that what the farmer's going to yell out next. There's huge amounts of money that people pay for advice they really don't need, and for advice where the person giving it can be very well meaning in it and believe their own line. But the truth is that you can't deliver superior results to everybody. That you can't deliver superior results to everybody by just having them trade around a business. If you bought into a business that's going to deliver what the business produces, and the idea that you can outsmart what the business produces, and the idea that you can outsmart the person next to you, or that the person advising you can outsmart the person sitting next to you is well, it's really the wrong approach. So find businesses, get a cross-section. In my view, for most people, the best thing to do is to own the S&P 500 index fund. People will